How's your cash flow? Now, this is one thing that people get wrong. Cash flow is king. You can have millions of pounds worth of orders up here, but it's about the cash flow that's in the business. So let's look at some tips to improve that cash flow immediately. First, we'll look at payment. So how do you receive your payments? If you're not already taking full payment up front, then you're missing a trick. Is that a possibility? Get the money into your bank account, not sitting waiting in somebody else's. Plus, the chances are if you get full payment up front, somebody will go ahead with the full purchase and won't drop out of it. If you can't get full payment, can you take a deposit? And if you're taking a deposit, let's look at what percentage deposit. It's got to be a decent one. So can you have a 50% deposit or at least a 25% deposit? Or is it the case that you're taking maybe 3 different payments that go along? You're taking an initial deposit, you're taking a midpoint deposit, and then you're getting final payment when you deliver the goods or services. Or could you look at vouchers? Or you could be looking at kind of buy now for a service, so you might be booking it. So think about, how do you get money in the business? Is it something that you can sell for a service or product later on? Okay, after this, we'll now look at your invoicing policy. So how many days? Is it 30 days? Is it 60 days? Is it 90 days? What's your invoicing policy like? Can you shorten that? So if it's 30 days, can you make it 14 days? Or can you make it 7 days? So the amount of time that's put in place will change the way your cash flow works. But the other thing when we're looking at invoicing policies is your follow-up. Making sure it's in your diary, so it flashes up on your calendar exactly when that red invoice is due. So if they haven't paid, the red one goes out immediately with the terms and conditions on the back of that as well. The amount of times people don't follow up because they're scared to, and dare not say, but it's cash flow within your business. Now, the third one that I'm going to talk about here, which you might seem strange as a title, is money. So it's about how you think of money in the business. Most people think, okay, we'll have the turnover, revenue, whatever you want to call it, minus the costs is going to equal the profit. And the majority of business owners will think this way. How much money comes in, how much money goes out on costs, this is what we're left with. But there's this strange little thing that goes on have you ever had it where you've getting £1,000 that's unexpected, and then you go, oh, I've got this money, and then all of a sudden, but there's actually something I need to pay out for £1,000 as well. So it might be that you want to get something done to your car or whatever it is. You end up that whatever money's coming in, it just so happens that money needs to go out as well. And what happens there is your brain's doing subconscious accounts balancing. So it's already telling you, I've got that money now, this is what's next. So do the same with your business. So what you look at is your turnover, and instead of minus the cost, it's minus the profit. So how much do you want out as profit? And that's going to equal what you've got left as costs. So then what you then say is, actually, this is what I've got. So what do I really need to buy with those costs as well? It changes your cash flow massively just by doing a flip around with this calculation. So 3 different ways to look at. First of all, the way you get your payment in, your invoicing policy, and do that flip on how you look at your money in the business. That'll bring cash flow in immediately.